All right. Let me also now welcome in Amit Jatia, Vice Chairman at Westlife Development, on their performance, a 3-4 jump in profit, and also what's in store going forward. Amit, same-store sales growth, let's focus on that for a moment, 7%. Was there any sense that you got on consumer demand being weak? And if not, how do you look at same-store sales growth going forward now?
So first and foremost, I think we've had a phenomenally good quarter. And I think the more important part is same-store sales growth is never comparable to a previous percentage because it's a compounding number. So on top of 26% last year, we've not only retained the 26% but grown by another 7%. So I feel, as I've always stated, our Vision 2022 talks of a sustainable same-store sales growth of 7 to 9%. And I'm delighted to say that we have actually done that in a tough environment. And I'm quite confident that that's the trajectory we will continue with for the rest of the year and for the years in the next couple of years for sure.
Profits have seen a threefold growth on a year-on-year basis. Amit, what's aided your profits this time other than the corporate tax cut?
Well, let's take out the tax, and our PBT was also over 100% growth. So fact of the matter is that, as I've always maintained, that as average sales continue to grow, because in the last 4 years, if a store was doing 100 rupees 4 years ago, today that same restaurant is doing 158 rupees. And that is the power of compounding when same store sales growth remains positive. So because we are doing 58 rupees more now, as we keep adding every new rupee on top of the 58, the flow through to the bottom line is much greater. So that's effectively called operating leverage. And as the business is beginning to see the operating leverage, clearly the flow through to the bottom line has been really solid. So I'm really pleased that our PAT has grown by over 200%. Even cash flow has grown by over 50%. And EBITDA has also grown by about 50%. So I mean, on every front, restaurant operating margin, operating EBITDA, cash flow, PAT, PBT, we've seen 200 basis points and minimum 50% growth. So we are really delighted that we are able to retain the growth in sales from the consumer, which is helping the margin move up.
Right. Amit, what's led to the margin expansion for you, and do you think you will be able to sustain these margin levels going forward as well?
As our average sales per restaurant is growing, because we are a high fixed cost business, the contribution margin is helping the margins grow. That is point number one. Point number two is that particularly again on gross margin, as our sales from McCafe and particularly some of the new products that we've introduced with higher margins continue to take shape and grow, that has been helping our margins as well. So I would say that between the average store sales growing year on year through positive same store sales growth, along with keeping tight control on cost and the gross margin improvement, we've been able to really pull through very nicely with margins.
Right. Well, what percentage of revenues comes from McCafes now, and would this, grow stronger going forward?
While we don't share the individual rupee amount of sales from McCafe, the important thing is that it has grown tenfold over the last 4 or 5 years. We think that this can easily double as well. So, my best example is that a few years ago, our total sales were 800 crores as a company. And I had said that a few years later, just McCafe and delivery will be over 800 crores in sales. And we are very much on that journey. I think by the end of this year, that is FY20, pretty much McCafe and delivery sales will be in that range. So we are really excited with the prospects of McCafe more as a beverage destination. And the other is, of course, the growth of our delivery business. So both are doing really well, and I expect the trajectory to continue. I think over a 3 to 4 year period, we will double the average store sales of McCafe even further.
Let's talk about the number of stores. You've added 5 this quarter. What's the profitability looking like, the kind of break-even period, the response you've been getting?
So, I mean, new stores are, a smaller percentage of our total. If you look at the same store sales growth, it's very robust. And therefore, I feel we've been able to keep the consumer demand going quite nicely, at least for brand McDonald's. So, recently we had launched our McSaver combos. And the pricing for the McSaver combos, along with the choices and some of the new products that we added, like the grilled aloo, chatpata, etc., has resonated quite well with the consumer, and yeah, I mean, we are quite pleased to see that particular growth.
You've targeted a 25 to 30 store expansion annually, and until now you've added about 9. Do you see, that target being achieved, particularly in the midst of the slowdown?
We don't revise our target. Even last year, if you see, we had done 9 to 10 stores in the same period. So over the next 2 quarters, we always do quite nicely. So we will be between the 25 to 28 restaurant base. And, our Vision 2022 talks of 400 restaurants. So we have said that we are pretty much on track to deliver the 400 restaurants. So store expansion is on track. And even in our worst period of 2013, 14, 15, we were amongst the only brand that was adding 30 restaurants a year. So we don't cut or increase restaurant base just based on the external environment. We feel that this is the right pace for growth, and we will continue to aggressively open new restaurants as we move forward.
Right. Amit, you've started the festive season with an attractive launch of McSaver pack at 59 rupees. How has this been performing, and do you think this is going to boost your sales this festive season?
I think McSavers has been a value platform for the consumer pretty much from April 2019. And even in the first quarter results, I talked about how it helped bring more footfalls into the restaurant. The whole idea is around everyday value to the consumer, and particularly with the rotation of products where the consumer can choose a burger with any beverage they like. And that freedom of choice, along with the pretty affordable price point, really helps us bring new consumers back into the fold, and it allows us to bring old consumers more often also. So we think that the McSavers platform will obviously remain consistent for the next 2 to 3 years. And yes, in the festive season, yeah, it's been a very good beginning, and customer response has been quite nice.
Right. So how's the performance of the company been in the rural areas, with rural now growing at about half times that of urban?
Actually, I don't know enough about the FMCG business, but I can tell you that from our point of view, I'm not seeing any difference between, say, restaurants in a Kolhapur or a Vapi or a Nadiad. I mean, we are in many small cities. And at least from our point of view, I'm not seeing that the business is any different there versus in the tier 1 cities. In fact, maybe because the base is definitely smaller than the larger cities, we are actually seeing pretty strong same-store sales growth in many of these tier 2 and tier 3 cities. So we are expanding quite nicely. In fact, we just opened Nagpur, which is of course a tier 2 city, but the response was absolutely amazing. And our sales have been really strong in Nagpur.
All right. Thanks so much for joining us, Amit, and taking us through the latest there and the kind of outlook you're looking at. No change coming in then in guidance. That's the view coming in from Amit Jatia.